Hey everybody, what's up? Welcome back to Go Be Trading. As always, my name is Jose, and if this is the first time you join us, thank you so much for being here. Happy New Year, everyone. Happy 2016. I hope you have all your plans in order for this new year, and I hope that you're going to achieve all of your goals for this year. I hope to God that you're going to achieve all those trading goals that you have and make that breakthrough in your trading career, and I hope you have all health and wealth. So today we're gonna do something a little bit different, a little bit easy, real fast, nothing too fancy. We're gonna talk about back testing. We are not gonna talk about trading opportunities for this week. We're gonna talk about back testing. And unfortunately, a lot of traders don't know about back testing. They don't even back test before trade a system that they find on the internet or book, or a system that they just invented. But whatever. Back testing, guys. Back testing is something real simple. It's test the performance of a system or strategy in a period of time. This time, as the name is saying, back testing is in the past. You're gonna test a system using data from the past. So, knowing this, let's go to the next slide. How to do a back testing. Back testing is real simple. Is using market price data from the past, trade your system with that data, and save and record the performance. When I talk about performance, is all the output that your back testing is going to give you when you back test your strategy. For example, the day that you trade that system, the hour, your entry price, your stop price, your target price, when you get out, when you get in, your reason for entry, etc., etc., etc. Real simple. What do you need for your back testing? The first thing that you need is a system or strategy. It's completely obvious. You need a system or strategy before you do your back testing. The next thing that you need, in my opinion, is a spreadsheet. I recommend the Excel spreadsheet. Why? Because it's something that you're gonna do yourself, that you're gonna know your data, and you can customize your spreadsheet the way that you please. The third thing that you need for back testing is data, price data, basically a chart. I normally use a Japanese candlestick chart. And the last thing that you need, something really important, is patience. Now, I'm gonna make a stop right here. Why I say that you need patience? Because back testing, in all the forms that you want to see it, is boring, real boring as hell. It's something so boring that you want to leave it in the middle of it. At the beginning of your back testing, you're gonna be all on fire. You have a lot of energy. But when you already back test maybe 30, 40 trades, you're gonna be tired. You're gonna be boring, and more boring if your system are showing that it's not profitable at all. So be patient. You're gonna be real boring, but at the end, when you finish your back testing, you're gonna feel good about yourself because you're gonna know your numbers. You're gonna see if your system is profitable or not, and when it's profitable. So let's take a look at this now. Let's take a look about your system or strategy. Your system or strategy must need a strict objective rules. Why strict objective rule? Because it's gonna make your back testing more easy. I'm sorry, easier. For example, this image right here, this is a bad pattern. For example, in my rules, if the market made a impulse leg, I'm gonna wait for a retracement. If the retracement touch the 50% Fibonacci retracement from X to A, then I'm gonna wait for a move from to the other direction. If this move touch at least the 382 Fibonacci retracement for A to B and not go beyond my A point, I'm gonna wait for a move in the opposite direction. If the market goes in the other direction without go beyond my A point and hit the 886 Fibonacci retracement from X to A, I'm gonna make an aggressive entry. In this case, a short entry. My stop gonna be above X, and my target is gonna be whatever my rule says it's gonna be. Period. That's it. Your rules can't have a section that says maybe if the price goes down here, I'm gonna wait, and maybe if the price goes right here, I'm gonna do this. No. Your rules has to be completely subjective. If the market do this, I do this. The market do this, I do that. Period. So, having this, let's go to the other thing. That is data or chart. Guys, every platform I think can give you data. You can download data. For example, NinjaTrader allows you to download data from thousands of days from the past, maybe 2,000, 3,000, 4,000 days from the past. I think Trading Station from FHCM give you data as well. You can go to Trading View. There's a lot of ways to have data. That's nothing of the other world. It's something real simple. So, knowing this, let's do an example of backtesting. For example, if I go here, let's delete all this. If I go right here and I want to backtest, for example, and let's say an ABCD pattern on the Euro, USD on the 5-minute chart, okay, from 2009 to 2016. That is an interval for a period of time of 7 years. That is a lot of data. So I'm gonna download data from my platform from 2009 to 2016, and I'm gonna take from 2008, and I'm gonna scroll candle by candle, watching for an ABCD pattern. For example, if I go here, let's check this out. Boom. This is a potential ABCD pattern. Boom, boom, boom. The pattern did not complete. Let's put names right here. This is A. This is B. Made a C. Let's made a D. Okay. This is C. and down here is D. This is my pattern completion. And let's make some rules for this pattern. Let's make a very simple rules. If the market do this movement and hit my D level, I'm gonna make an aggressive entry to go to the other direction. Okay, the pattern did not complete. I discard this pattern. I just delete it, and I just keep looking, scrolling my candles. Boom. I have another ABCD pattern right here. Let's put the letters once again. This is A, this is B, this is C, this is D. Okay, and my rule said when the price touch my D level, I'm gonna make an aggressive entry, looking for a move of the other front to the other direction. I establish a rule for my stop. Let's say my stop should be right above D. This is just rules that come to my mind. Here is my entry, and my target is gonna be somewhere down here, for say something. Okay, and boom, I just get entry. I just get into the trade. The market do not stop and go to another direction, and boom, just hit my stop, and I'm out of the trade. I just showed you mark when your market stops you out. Boom. That's all. The trade ends right there. So what do you need to do next? You need to go to your spreadsheet and collect the data, all the data that you get from this pattern. The normal data that you need, the normal data that you, or the general data that you normally backtest is the date of the trade, the time of the trade, your system, your reason, your type of entry, your entry price, your stop price, your target price, and where did you get out of the trade, if it was a loser, if it was a profitable trade, and all those things. So, all right, let's do this, guys. Let's take a spreadsheet from my Excel. This is gonna be real easy. You're gonna take your spreadsheet and you're gonna type backtesting on the Euro USD, or of a ABCD pattern on the Euro USD on the 5-minute chart, and I think from 2009 to 2016. That's it. So the data that you need on your back testing, the input of your spreadsheets that are real simple. The first thing that in my opinion you need is your entry date, for obvious reason. The second thing that you need is your entry time. The third thing is let's make some spacing here. The third thing that you need is your pair, if it's in Forex that you're gonna trade. The fourth thing is your chart time frame, your system, next maybe your type of entry, next you need a your entry price, your stop, your limit number 1, limit number 2 if you take more than one target, etc, etc, etc. That's all the data that you need. Let's put this a little neater. Boom. Let's put some color. No, this is pretty ugly. Boom, right there. There's some grill right here. That's it. Do you need more data? Of course, you can put the close date, your exit point number 1, etc, etc, etc. This is something real easy. Nothing fancy, but this data is gonna help you to identify is your system is what's gonna be profitable or not if you trade that system from, for example, 2009 to 2016. Real easy, doesn't it? So, for example, if I take this, considering this a back testing, I'm gonna do entry date. My entry date was day 3 of the month number 3 of 2009. My entry time was at 7:45. My pair, the Euro USD. Chart time frame, 5-minute chart. My system, the ABCD. My type of entry, let's say a decompletion. Entry price was at 126.38. My stop was at 126.49. My first limit order was at 126.17. My second limit order, I don't have it, so I'll put in 0, apply. And my close date was the same day, and my exit number 1 was my stop because I was stopped out, and I just take this and put it right here. That's it. That's a back testing, guys. Nothing difficult, nothing of the other world. Real simple. So guys, that's it for back testing. I hope you enjoyed this video. Real simple, but a thing that every trade needs to know to be successful. So that's it for today, guys. I hope you're okay. Please subscribe to my YouTube channel, subscribe and share this video. Please visit my website, gobtrading.com. You're gonna find a lot of educational content on my channel. If you go and subscribe to my channel, you're gonna have more educational content like this, more richer, more data about trading. And that's it, guys. I hope you have a great day, great night, great evening, whatever you are, and see you on the markets. Take care, guys.